Welcome to Trading Lounge and the Asian Indices report for the 19th of December, starting with the ASX200 here. We can see here that the market in this little space, well, in this particular little trend here, that the market is not really expanding out, is it? It's really it's moving down and it's finding all the resistances that we've been looking for. We'll have a look at those in a moment, but it's not really extending down. So there seems to be a lot of support in this particular area here. Yeah, look, it's all getting a bit scrunched up in here. So it's either that we're coming to an end of a trend in here, or that scrunched up in here would be a series of ones and twos in here, and we'll get a sharp drop through here. So I'm not quite sure, but the trend is still certainly to the downside here. So let's just go in and have a look at this on the 4-hour chart here. So from wave B here, we've got wave 1 and wave 2 here, and then 5 waves for wave 1. Wave 2, 5 waves for wave 1, back for wave 2 here. It went a little bit higher rather than the 61.8%, but it never made a new high here, so we need to look at that. So this would also be the next impulse wave moving down. So I'm still expecting it to come down to this support here. A couple of the things here is that, well, 500, then 800, so the Fibonacci numbers of 1, 2, 3, 5, and 8. There are minor levels in here. Then we've also got the level which is halfway between 500 and 800 here, which is the 5650, an odd sort of number, but always plays out well. And then we've got 5600 here. 56 is quite important. Gann used it all the time, and we can see that we've got a nice, this was support over here and now it's become the resistance here. So we're on the right side of the market because we're on the right side of where all the pressures and the resistance is. So we're on the right side. So also our next little venture here is the 5-6 here. So we can see that we are at resistance here as well, so we should see this move down further. The only point that I was worried about is that this particular move up through here, it can be counted as a 5-wave structure up through here. I've got it as an ABC for the A wave and the B wave and the C wave, which will give wave A here and wave C some type of equality and relationship there, and also pulling back into that space. But if for some reason that it was 5 waves here, then we'd have to look at this as an A wave, a B wave, and a C wave on this low here. So this low becomes really quite critical here as such. So what we do want to see is we want to see this low here breached here. If that's breached here, then that helps us confirm that we're on the right track coming down here further, down into the 5-5 here, and then we can look at this as wave 1 here, wave 2 here, coming down for wave 3, 4, and 5 here for the third wave here, with our target very, very roughly around 5,300. So yeah, anyway, that's just an important point in there. So let's just go into the hourly chart here. A little bit messy, but so from this wave 2 up here, we can look at all of this as wave 1 here, and as I've mentioned, I've got this as an A and a B and a C, which can be counted as 1 and 2 and 3 and 4 and then 5 up through here. Then that would leave this as an A wave, a B wave, and a C wave. So that low there is really quite critical. So we can look to add any short positions in this market once we've got that low there breached, or this is all of group 2 here, which is supporting this market. So if the 5572 becomes the retested resistance, then you can look to short this market through here. Yeah, so this can also be counted slightly differently through here. This can also be wave 1 over here and wave 2 over here, which would leave this retracement level here over to here, which is roughly the right space for that there as well. It's just that this looked like a nice A wave, a B wave, and a C wave here for wave 2, so I've had it here. So I might just sort of leave it there. Yeah, so that's kind of where we are with this. Yeah, once this becomes the resistance here, then you can bring your stops down, well, from wherever you've got them up in these highs here down to this point here, which it looks like it's sort of going to be breached at this point. So, but I'll just leave that out the way for the time being here. Okay, so on to China. So China here, we've got this triangle pattern on a 4-hour chart here from wave 3 here. We've got an A and a B and a C. So we know that this is corrective. This is a corrective pattern here. So we know at some point, once this is finished, that we'll be making new lows below here. Okay, so but an A wave here, then an A and a B and a C for the B wave here, A, B and C here. And then I've got this as D and E here, but this could also be counted as wave 1 here and back for wave 2, then wave 1 and 2 and 3. So, but yeah, still got a problem with that. I haven't had time to look at that. I don't think many people actually trade this market, but it's China, it's an elephant, so we've got to, you know, we need to look at it. So with this here, it does appear that we've got 5 waves down here. So the 50-60% retracement level is at 11,000 through here. If it cascades down further and finds the, if I put this here on the 8 here, there'll be bounce here, which is bouncing now basically. But if it finds that as the retested resistance there, then you'll put your sell order under that reference point low, and then if it's breach from that point, then you can short it from that point and look down to the next level at 10,500 here. I don't think the 1-hour chart is going to give us much more detail here. So yeah, I can count 5 waves down through here. I was a little bit unsure about this spike that we've had here. So it's possible that this could be wave 1 here, and then we've got an A wave here, a B wave here, and a C wave coming into this space here. But I just think we need to be prepared for this to move a little bit higher through here. So yeah, let's just if it doesn't move up here and it moves straight down through here, then you need to be short at that point. And the Hong Kong market, I'll just get some perspective on this. So wave 3 here, in this case we've got an A and a B and a C, and in this case we've already got wave 1 in blue here and wave 2 here, then we've got wave 1 and wave 2 here, and we'll be looking for wave 3, 4 and 5 moving down lower through here. So this is the place to start looking to short this market. So we've got shorts in already with all of this. So you can see that the spike is actively a little bit different here. We've got 1 and 2 here, and all the way for 3, 4 and down for 5 here. So this spike here, that can be the ABC in this pattern here, and that wave 2 can go there, and this can be wave 1 and 2 and breaking lower through here. So probably a safe way to look at this would be, if I can just get essentially taking this low out here. So if I can just put that across here, so that if you wanted a safer trade, then that would be it here at this point. So I don't know that spike. It's just really quick, you know. So yeah, but once again, an A wave, a B wave, and a C wave can be placed in here as well. But obviously, the 26,000 is the resistance. So in terms of the classic trading levels pattern to the short side, then we would have this as the arrival, the reaction, the first low below the level, and then the correction, then the reference point here, retest and down. So this is the place to short it right on here. The Nikkei from Japan here. So just on the 1 hour chart, we'd had ABC for wave 2 here, and then in this case here we can count 5 waves down through to here. So I'm labeling that wave 1, pull back to 50-60% retracement levels, wave 2 for the short, and then down for 1 here, and then back into the 50-60% retracement level here, and then down again. So 21,000 is still the support here. So also too, if you wanted to add to this position here, if I can just draw this here, we come down for, well, we've already had our bounce here, but even so, we'll get a second little bounce through here, so I'll just draw that in. And then once this becomes under here, then you'll have this here as well. In fact, what we'll do with that, let's just copy this here. That would be the reference point low coming in through here. And you need to keep the stop out of the way too if you take this trade, because it's normal, because we've got number 8 here, it's normal for this market to come down to 8 here and then retest back into this space again before even going down again. You could also use when the 800 becomes the retested resistance, you can also short that as well here. So if this is wave 1 coming down through here, then wave 3 here is going to be longer than wave 1 here. So if we take this here down to here, and then we just move that, put that here. So we're heading down to the 20,000 area here. Okay, so and it's good that the pivot within group 2 here, group 1 is 1, 2, and 3, and because this is the resistance here now, it's been tested as the resistance, that means that the market will be drawn to the closest largest number, which is down to 20. So this is quite a reasonable safe trade coming down through here. And India, the Nifty, it's still moving to the upside here. So just in the bigger picture here, we've got the A wave here, an A, B, and C wave here, and then we're looking for 5 waves up. This is 61.8% mark up here at 11,100. So we're looking up into that space, and on the 1 hour chart here, India is defining all the rules. God bless them. 1, 2, and 3, and 4. And then 1, and 2, and 3, and 4, and 5 coming up into this space here. So I'm just looking at this here. It doesn't really matter. Still leaves us with wave 4 there. So yeah, still upside here, but this can pull back 30-40% here of that length here before moving up further. Alrighty. That's it. Okay, thanks for tuning in. Much appreciated as always. Cheers.